back to Block TV. It's time now for Cryptonomics. And the US Internal Revenue Service issued formal guidance on cryptocurrencies on Wednesday, the first such major release since 2014. While the new information clears up some long-standing questions, it could expose anyone who owns cryptocurrency to new tax predicaments. Among the clarified guidelines, the IRS rules that the occurrence of an airdrop or hard fork triggers a tax obligation. This raises problems because recipients may not have asked for it but will still be taxed. And to help break down the latest developments, I'm joined in studio by Gidi Bar Zakay, founder of Bittax. Gidi, thanks so much for joining us.
Thank you for having me.
All right, so to kick things off, explain for our audience, what does this ruling really mean in practice, and what are some of the implications that US crypto holders are going to have to deal with?
So IRS did a very thorough work and job and put everything in writing and actually provide us with questions and answers for like more than 40 reasonable points that people need to review. So most of it is like more of the same. We were explaining things that were actually quite clear, but now it's very much in place in order. It combines the regular role with the cryptocurrency taxation, which is making sense. Two major issues are covered for the first time in a very thorough and also actually interesting way. So the first one is, as you mentioned before, it's the hard fork issue. So when you have a hard fork, you have a coin, you have currency, and then when the hard fork occurs, sometimes you are entitled to get some cryptocurrency of a new kind. Now, if you receive them, even if you get control of them, until you sell them, actually there is a question, a big question. Are you liable to pay taxes for the event of the admitted? That you just got them? Do you need to pay your taxes right now? So IRS is very clear at that point. Once there is a hard fork and you received some cryptocurrencies, this is a tax event. You should put the income in your filing. So this is an income. The point is that IRS determines that also, even if you don't sell this immediately, this is still a tax event and you have a cost basis for the next sale. And you need to adjust this to what you decided was your current value. And the current value is like by fair market share, right, when you were able and when you received this coin. So it's important to say that even, as you mentioned, even if you don't do anything in your power to obtain the coin, which you need to do some technical issues in order to be able to have them with yourself, and you could be able to do something with them. The ability, sole fact that you're able to do that, it means that they're yours. You received them, even if you didn't take any action to do that. So this is one major issue. And on the other side, they said that if the hard fork is not involving any cryptocurrencies deemed to be accepted by yourself, then you don't have a tax event. This is item number one, extremely powerful, extremely important. This needs to be looked at because I think it makes sense to have a tax event, but then it also makes sense also maybe to defer this tax event. IRS decided for now, no deferred taxes. It's right now, once you got it. And I think it's interesting because some people filed already. Maybe they need to amend the reports because they didn't include these pieces of cryptocurrencies that they got. Second issue is very important also, and for us in Bittax, it's like something that we actually predicted that would come. So IRS says, listen, if you're able, and this is mainly about Bitcoin and Bitcoin blockchain and the likes, so if you're able to do specific identification with your cryptocurrency, you're allowed to do that, which means that if you are not able to do that, then you do FIFO. FIFO is like first in, first out, and in the climbing markets since 2010, which Bitcoin was less than $1. And by the end of 2017, it was $20,000. We don't know what will happen by the end of 2019, but the amounts are huge. So this is around $10,000 up and down lately. It means that if you can identify the assets that you've sold, statistically, you will be saving a lot of taxes. Because if you can identify and you can look at the blockchain, so IRS did a serious job. They looked at the technology and they said, this is exactly what you need to provide us with. So if you have a wallet, if you have exchanges, if you have addresses on this wallet, once you have the whole picture, you can use specific technology in identifying the assets. You can do that. So it means two things. First of all, it means that you can go ahead and identify your assets, and also in most cases, it will be reflecting in reduce of the taxes, because if you don't do that, you do FIFO. And if you do FIFO, it means like whatever you bought in 2010, 11, 12,
Right.
this would be the first DIM to be sold. So if you do specific identification, you are basically improving your situation
Right.
as it is. Another important point is that from now on, you can look at the blockchain, and this is actually what we do in Bittax. You can look at the blockchain and decide which coins do you want to sell. You can do tax planning. So actually, if you bought Bitcoin and the cost basis was high, and you can identify this specifically, sometimes you can perform some purchase to buy stuff, to buy property, and then you get to deduct losses from practically
specific
using
coins.
the specific coins you did, which is actually what the IRS says you can do. But this is only if you can identify specifically the coins that you are selling. And to tell you, we're dealing with this almost for 2 years. This is difficult. It's not as easy
Right.
as it looks like or as it sounds, but virtue of doing so, you can
Save a lot of money.
you can improve yourself. But what's more important, you get to have a full picture of what you do.
Right.
Because I think the sensitivity, and we saw like last month, the IRS, a bit before, IRS sent 10,000 letters to taxpayers, advising them to look through the reports. And sometimes they were pending on reports that they got from the exchange, that they were not fit with what they reported. So IRS is anxious to look at the stuff, to see that the reports are true, full, and have all the information. And if you look at the blockchain, and this is our understanding, and this is what we see in the future. I've been a regulator in the Israeli Tax Authority for almost 2 decades. And what we saw there is like the evidence, the basis of evidence is extremely difficult when you'd like to tax finance.
Right.
And with blockchain, it is a mutable ledger, and I think the IRS saw through. They look at the blockchain, they understood that this is immutable. I think if you work properly with the blockchain to track the history and to do calculation, if you can fix this, you can actually steal a Bitcoin. So if you cannot steal a Bitcoin, and nobody can steal a Bitcoin from blockchain,
Right.
they can steal from wallets, but from blockchain nobody can. So these calculations, for a regulator, I can say this as an ex-regulator, is a dream come true because they know what they see is honest.
Right.
They see full picture. So taxpayers can treat themselves right to make sure that once they file, it's over. They don't need to refile again because they see everything and they get to admit a full picture. And the IRS, at their part, get to have these reports. And I think this will encourage taxpayers to go forward and file because, you know, for people that think that the cryptocurrency is flying in the air and you can do whatever you want, they do not understand what they talk about. And I'm happy to say that the IRS dig in. You see that the people knows exactly what they talk about. So I think this is good news for cryptocurrency because we believe that the next step for cryptocurrency to become what it needs to be in our society, in our economy, all fields of life, this is going through regulation.
Right.
And I think that once we go through regulation, bear in mind that the next step is like you can perform payments in the e-commerce. So whatever you perform, and this is also in the questions and answers for the IRS. If you'd like to purchase something, on the other end, you've sold an asset. So this is something that can easily be treated on the blockchain. You can record this. You do the same. You just pay. You don't know if you paid from Visa or you paid from cryptocurrency.
Right.
But this is all on the ledger. You can review this, you can edit this, and you can pay your taxes as you go. So this is for the future. I think this is a huge step for admitting cryptocurrency into our regular life, into our commercial life. And I think what the IRS did is giving a very clear picture of what you should do. I'm a bit concerned with the question regarding the hard forks and the taxation.
So I want to address that point because as well, I mean, there's 2 elements there. Firstly, I want to ask, I mean, is this going to apply, this advice now? It's updated advice, it's new. As you said, there are those that have already filed and may have to refile on that issue. Is that applying retroactively or is it only applying to future transactions?
Well, I can only offer my understanding, and I'm an Israeli tax expert. But to my understanding, this is definitely going retrospectively because they do not change the law, they just clear the law. They say, this is how things are. If you didn't follow this rule, maybe you should because this is in the book. I think what we in Bittax believe, and I think this is exactly what's happening now, we shouldn't wait for laws to be changing because it will take agents. We should implement by current law. And current law, if you review, actually this is a tax event, no doubt. I'm hoping that when time comes, and I think sooner the better, they will enable this to be like-kind exchanges because in the law there are some kind of paths that you can use in order to defer profit. If you exchange, let's say, real estate, you don't pay your taxes immediately. You can defer to pay later because you don't need the money. So I think on the one hand, if tax authorities says this is asset, this is not currency, and on the other hand, when it's exchange, you should support this with enabling people to defer the profits. I mean, there's no harm in that because I think what happens now is that people have a shortage of cash in order to support this.
Right.
So this is a problem. I understand why they went this way and I understand this is making sense by the law, but I think we should consider, I think it should be considered, and we're also talking to the tax authorities in Israel as well, to defer this tax event to the time and place where you meet fiat money, regular money. Because if this is the way you address things, then it should be addressed the same from two angles, taxpayer and tax authority.
And then, I mean, I suppose it gets to that as well, because as we discussed earlier, when it comes to hard forks, I mean, often those are events that occur outside the control or actions of an investor.
Very good point.
And so they're going to be having to deal with events that might be, you know, perpetuated by an industry that's still developing, that's changing, that's innovating.
Even if they didn't want this to happen.
Exactly.
And there is also a question of value, because it is to determine the time and place in which you are liable to do the tax event. And these markets are very volatile, so it's changing. So you might be in a situation that you had to pay a lot of money for something that is not in your possession anymore.
Right.
These are problems. And also there is a saying that you cannot expect somebody to pay taxes on an income that was forced on him.
Right.
But in this case, I think this is like if you follow the law and if somebody became rich and he got the property and he is able to approach it, then it's a tax event. I think it should be considered maybe as a second step after filing is done to maybe enable the deferred profits in a manner that will make sense in time interval, in value intervals, because like this, I think it will be reflecting in a burden that is difficult to deal with, but this is the law, and I think we should face this. That for now, I think the right thing to do is to look at things, and this is also something that we try to do, and we do with Bittax. What we do is we follow the track of each and every small transaction. Then we're able to determine what was the cost. And if you have like a fork and you have a cost basis, and then you change and you exchange the alts and you buy and you sell, then you can work your way with a very solid cost basis, not because you deferred, you pay taxes as you go, but then you need to use whatever you did as a cost basis for the next step. So if you plan ahead and you look at specific identification and you look at the way that you exchange coins, you can do much better. The most important thing is that you file correct. You have a whole picture. Right. I'm afraid that some cases, if you don't do that, you might pay more taxes than you have to,
right.
And then you didn't report everything. So it's like a lose-lose situation. You need to make sure you see the whole picture, and also to be working with the solid efficiency for taxation, which is like specific identification, see what you do. And if time comes and you decide that FIFO is better for you, I did not see many cases that it is. But if it is the case, you can use FIFO. FIFO comes with other ramifications for the future, and specific identification is keeping you free. You can do whatever you want next. And if you do FIFO, you need to be consequent for the next years. Right. But basically, from what I saw, specific identification is tax efficient, and you can also plan ahead, which is extremely important. Our clients use Bittax facilities to decide which moves to make. Even if you would like to deposit to an exchange to do some cashing, you can choose exactly which coins and which UTXOs you want to spend, which is like great results.
The power of giving that clarity and surety to be able to actually move forward with a tax plan and make sure that you're not getting additional losses.
And make cryptocurrency great.
Exactly. It's a goal we can all believe in. Gidi Bar Zakay, I want to thank you so much for helping to break down this complex issue. A bit of clarity coming in, but still plenty to talk about. So stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.